This is Alan Farley from FX Empire. Uber Technologies is losing altitude at a rapid pace. Looking back, right after the 2019 IPO in the 40s, the stock stretched up to about the 47 level. That marked the top ahead of a two-wave decline that brought the stock to an all-time low in the lower teens during the pandemic decline. It also recovered in a two-wave. Here's a one, here's a two, two rally waves, back up to this prior high in November. It broke out above both this high and this high at that time, stretching into this sort of volatile rally that got all the way up to the mid-60s in February. Well, it's been all bad news since that time. The stock carved this little rising wedge and then broke this wedge to the downside, coming into a test of this 2019 peak. It initially recovered and then completed a breakdown, then slicing through the 2020 peak in the low 40s. As you can see here, it's broken down. It's come back up and tested it, and it's coming all the way back down to this prior low, which was hit about a week or 10 days ago. Now, none of this is good, especially with this unfilled gap back here from is this October, November? This is actually November. This is about from 36 to 39. There's a very good chance this gap is going to now get filled, and hopefully that's going to be the end of the correction, but we'll have to wait and see. It's especially difficult for long-term shareholders because here we have this IPO right here about 42, but guess what? The stock's trading below its IPO price, and there's no dividend here to go and soften the blow. So shareholders in Uber are feeling the pain, and this may continue because there's a lot of legal pressure building on Uber and all the rideshare industry to go and pay their workers better, to transfer them into employment status. And there's a lot going on in Europe as well that produces headwinds that the rideshare model may be unable to overcome.